And it comes down to like, why do you have banks? What do they do? Well, one thing is to have a payment system. So you want to be able to like write checks and pay people and pay your bills and have a clearing system. And so we have a banking system for that. That's one aspect of it. Nobody has too much trouble with that. They might think the fees are high or something like that, but that works pretty well. And until there's a problem with the bank and suddenly, your money's at risk, and that doesn't work. Okay, so they say, well, what you need to do is, each individual has to determine, let the market decide which are the safe banks and which aren't. So people can do that, with whatever knowledge they have. They can decide whether to put their money in this bank or that bank, and the market will decide which banks are the safe banks. And so that's the argument against deposit insurance. Okay, one way to do it is what we have, which what I say is full deposit insurance, where all the deposits are insured. The other way is with no deposit insurance, and because then the market will figure it out. And that's what the so-called, can I use so-called, so-called market proponents, neoliberals talk about, that's how it should be done. Well, there is no such thing. It can't happen. Okay, nobody can tell which bank is safe and which isn't. A year before 2008, the top analysts on Wall Street thought they were all that they were all safe. And if there was a banks one analyst thought wasn't safe and others thought it was safe. And what is each individual supposed to go out and read the financial statements for the major banks and decide whether to open up a checking account? It doesn't serve public purpose to attempt to use the market that way. And it doesn't work, because what happens is, somebody starts a rumor in social media that they saw the bank president's wife taking money out of the bank. So all of a sudden there's a panic. Everybody tries to take their money out, and the bank fails because there's no backup, because they're dependent on the market. And so the market, in all its wisdom, has decided that bank needs to fail. It's always for some reason that's highly suspect, right? It's not. Even the banks that failed in 2008 and were liquidated, on a look back, they were not insolvent. Okay, it was just liquidity issues, and I'll get back to it. But for the Fed to close a bank on liquidity is just, outrageous. It's inexcusable. That just shows a complete lack of understanding of banking. But back to what we're talking about. So you have a payment system, and for me as a progressive, you've got to have deposit insurance. Okay, and so the system, you can't have a payment system where everybody's worried about whether or not the bank's going to fail. So people say, well, let's use the post office. Well, the post office, in what way? So if your branch of the post office fails, then you lose your money? No. Your money's safe because it's in the federal government. Well, that's deposit insurance. Okay, so 100% deposit insurance, to me, is the way to go. Full deposit insurance, 100% of anything you put in, with no limits. Anybody who wants to put any money in any bank is fully insured. Okay, now once the banking system is fully insured, now they're a pretty dangerous animal, because now people will give them money regardless of what they're doing with it. And so that now demands full regulation, like presumably we have today. So you have to regulate and closely supervise everything that bank does, because that's government money he's got once you have full deposit insurance. Okay, and so the way I say it is, the liability side of banking is not the place for market discipline. The liability side is the deposit gathering side and the borrowing side. That's not the place for market discipline. Okay, and so you have full 100% deposit insurance, and then the discipline comes on the asset side, on the regulation. And that's what we have today, where the federal government has the Federal Reserve Act, Congress has the Federal Reserve Act, and that controls what a bank can do with their funds. Okay, and so they have capital requirements, leverage limits, asset limits, everything. A bank can't do anything without permission from the Congress. Now, one thing Congress does that I would do differently is Congress will tell the bank what they can't do, with the idea that anything else is probably okay. That, I think, is the wrong way to go about it. What you have to do is tell a bank what they can do, and then nothing else is permitted. To me, that's a much more safe and secure way. Nobody's good enough to figure out all the things you can't do, because they keep coming up with more things that aren't on that list, and then the list keeps getting expanded. Okay, so if you just start off with what they can do, and then if they want to add something, have them petition to add it. To me, that's a much more rational way to run the whole thing.